Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Service International Limited. Here's your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. An indecisive spinning top yesterday, which on the one hand was not that surprising a move. Yeah, on the other hand, it was surprising as we might have expected a follow-through. Let me explain. I have in recent days been highlighting how this market was getting squished, imperfectly I grant you, in between the same overhead combined dynamic resistance that we'd seen since May 2020, of the upper time currently at 113.71, of the broken January to May 2021 bearish Andrews pitchfork, as well as a declining medium moving average currently 113.88. These two bearish resistances, though breached and broken, have successfully not only kept a lid on the market, but pressured it lower. Meanwhile, below we have a slew of supports that have also been pressuring, but upwards. They are the short-medium moving average, currently at 113.28, the lower trend line of the November 2021 to January 2022 ascending triangle, currently 113.31, and especially the neckline, currently 113.14, of the April to May 2020 reverse head and shoulders pattern, plus just below that with the interesting 61.8% Fibonacci line, the March 2020 to January 2021 move at 112.89. Well, 2 days ago, the market made an attempt to break lower, a daily key reversal down. However, the same day could also be seen as an indecisive doji cross, which dented the opportunity to hit lower. Hence a surprise that we didn't follow through lower, but then not a surprise really, that yesterday was an indecisive spinning top. Overall, all the action since the start of the year continues to be reminiscent of a potential pattern build-up, such as a diamond pattern or cat's ears pattern, or something similar. Unfortunately, it's still not that clear, but it will be, and soon. So far today, a very limited move higher. Still in between the previously listed supports and overhead resistances, as it continues to increasingly look as if something is going to give way, and soon. Cable, aka sterling against the US dollar. A possible hammer pattern yesterday, one that is traditionally seen as a bullish pattern. I suspect this pattern may have happened because of the testing of the lower time, currently at 135.92 of the newly drawn early December 2021 to late January 2022 bullish Andrews pitchfork, as prices pierced the lower time but closed right on it. I'm beginning to suspect this pitchfork may have a limited lifespan, as this is the second time the lower time has been pierced. The last time was on Tuesday last week, and these 2 days not only make up a 3-pointer uptrend currently at 135.40 from late January. Below these, we have the 2019 high at 135.16 and the flatlining medium moving average, currently 135.04. Then the rising short medium moving average, currently 134.95, and the September 2020 high at 134.83. Meanwhile, above, we still have the overhead declining congestion of the July 2021 to date downtrend, currently at 136.60, the long moving average, currently 136.75, and the upper time, currently 137.06 of the October 2021 to January 2022 bearish shift pitchfork. Overall, the market continues to get swished in between these overhead resistances and the supports below. So far today, well, looks like the beginnings of a bullish engulfing pattern, if only just, as the market moves up and away from the lower time and up towards the overhead declining congestion, but not really that hard. The market continues to get squished. Euro sterling. An interesting and in some ways disappointing combined daily key reversal up and bullish engulfing pattern yesterday. Interesting because the market bounced up and away from the middle time, currently 83.13, and I suppose also up and away from the broken but potentially still potent lower falling wedge trend line, currently at 83.28 of the old August to December 2021 falling wedge pattern. However, it was disappointing as the action could have been just so much more. You see, the market almost set the stage for a weekly key reversal, but in the end, didn't quite make it. I also suspect this reaction yesterday will not halt the previously highlighted overall testing of these supports. All that yesterday did was show how limited the resistance is over here between 83.36 and 83.60. Finally, with just under a week to go, it is interesting to see that we are already set up for a possible monthly key reversal in February. If we close on the 28th, either over 8400 or under 8350, then we'll be on. Right now, we are looking at a possible monthly key reversal down. So far today, well, a small move lower capped by the resistance in the 83.36 area, but finding it tough moving down there, and we've pulled back up again since. US dollar against the Indian rupee. An interesting piece of action yesterday. You see, you could look at it as a possible inverted hammer pattern or a shooting star pattern type 1 bearish. Now, inverted hammer patterns are traditionally seen as bearish, but, and it is an important but the data indicates they are bearish some 60, start this one again. US dollar against the Indian rupee. An interesting piece of action yesterday. You see, you could look at it as a possible inverted hammer pattern or a shooting star pattern type 1 bearish. Now, inverted hammer patterns are traditionally seen as bullish, but, and it is an important but the data indicates that they are bearish some 65% of the time. Additionally, for a 2-day inverted hammer pattern, the inverted hammer action is a little too high. Meanwhile, the alternate idea of a shooting star pattern type 1 bearish is possible, but it is in the wrong place. It is a little too low. So between them, they have enough reasons not to happen. Overall, up and above, we have the moving average congestion of the medium, currently at 74.82, short medium 74.83, and the short medium currently 74.84 moving averages. These three are all set to become a bow tie formation in the next few days. Additionally, we still have above the broken but important 2022 uptrend, currently at 75.01. The reason why this is important is that it has triggered up to 2 patterns. The first is one I've pointed out beforehand, is to regard this uptrend as the lower wedge trend line of the recent rising wedge pattern. Now, this pattern gives a potential target X1 in the 73.67 area. That is right on the 61.8% Fibonacci line of the July 2019 to April 2020 move. On the way down to this, we have some support stroke resistance from the 50% Fibonacci line for the April 2020 to February 2021 move at 74.63. Then the support of the long moving average, currently 74.36. Then the 50% Fibonacci line of the February to April 2020 move at 74.26. And finally, the two of them, the big 2018 to date uptrend currently at 74.05, and the August 2021 to date uptrend currently at 7400, before we reach the 50% Fibonacci line for the whole of 2020 and the 2022 low at 73.74. Now, there's quite a lot of supports to overcome, and I'll be interested to see how the market deals with them. Then there is the second possible pattern. It is to look at the whole of the December 2021 action to date being a possible large bearish halfway hesitation. This will give a potential target X2 down in the 73.15 area for the moment, with a closer target X1 nearby. I'll do no more than keep an eye on that one, possibly the second one, possibly, and its target. And there's one final point to bear in mind. We had a weekly key reversal down last week, just keep that in mind. It was only just. So far today, well, either side of the 50% Fibonacci line at 74.60, we've a move below on at the moment, but not by much. US dollar against the Brazilian real. A bearish opening black Maribosa yesterday, and also a third bearish black crow that made a new low and low close not seen since July last year. The market continues to make its way lower, utilizing the previous support of the interesting 38.2% Fibonacci line, the big October 2019 to May 2020 move at 510.87 as a cap on the market. Prices moved down through a fairly clear area to tackle the congestion at 505.73, breaching it but closing right on it at the end of the day. Overall to this, The market has still kept within the cone of the early January to date declining broadening wedge pattern, currently at 519.78 to 479.31. This wedge pattern, as detailed in its name, has been dictating the move lower since about mid-January and still continues to do so. US dollar against the Mexican peso. A second indecisive doji cross yesterday, and overall the fourth consecutive indecisive pattern in a row. However, it is yet another consecutive close below the slowly rising long moving average, currently at 20.3405. Now, whilst we may not currently have the aggressive nature one would look for with such closes below significant support, one should not diminish the importance of what has already been achieved. You see, this is now a major breach lower, verging on a major break lower, if the market would only move that way. So if we maintain these or lower levels, then we have the possible beginnings of a large bearish halfway hesitation. Initial target X for this would be in the 1985 even area. We'd need a start and soon for this pattern to develop. Hence, I would look to the recently drawn mid-December 2021 to late January 2022 bearish Andrews pitchfork to give an idea. The upper time, currently at 20.4022, has merit, as it was tested twice and held on as a dynamic resistance line. It all now depends if the market will carry on with this pitchfork lower or not. Looking below, we now have supports at 20.0066, then the middle time currently at 19.9529, then there's obviously 19.92 even. However, the next sizable support will be the July to September 2021 based uptrend, currently at 19.9805. Finally, there's a possibility to look at the late September 2021 today action as a possible head and shoulders top or head and shoulders continuation pattern. I'll ponder on this idea a little more, especially if we move somewhere. So far today, a small move lower. Now let's not all get excited, but it is a small move lower from the open so far. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyrights Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.